Nigeria's stock market remains red hot in early 2026, with some investors worrying the market may be in a bubble. Now, the all-share index continued its climb on Wednesday, rising by 0.04% to 252,508 points. So far this year, the market is up 62.27%, and we're just in the second week of May. Now, to put that into perspective, for all of 2025, the market was up 51%. Joining me now to discuss this further is Taofeek Subair, who is Investment Research Analyst at Pathway Asset Management. Taofeek, good morning. Many thanks for joining us
good morning.
On the
Nice
show.
For having me on the show.
You're most welcome. Now, Taofeek, Nigeria's stock market is undoubtedly on a historic run. I mean, market cap crossing the 160 trillion naira mark is quite the height, isn't it? What can we attribute all of this to?
Okay, so looking at what the market has done so far, we can attribute it to a collection of factors. So if we start with the microeconomics, so we have seen that the present administration, when they came in, they started with foreign exchange reforms, which has now strengthened our foreign currency, which has given us a good reserve that can support the exchange rate. So that is a significant factor because it's going to make foreign investors to come into the market and kind of plan ahead of time based on their duration that they want to stay in the market. So beyond the macroeconomy that we've seen in that space, we also see a market reform. So by market reform, we have seen that our market is now trying to align with global standard. When you look at the trading hours, which was recently increased from 9 a.m. now to 4 p.m. instead of 10 a.m. to 2:30 p.m. So that has created the engagement. The participation is now very solid, and by June, the trading cycle is going. The settlement cycle will also be very interesting because instead of doing T+2, we are going to be doing T+1, coming from T+3. So all of those things has now made the markets to be now very robust. So it's creating participation both locally and from foreign investors participation. And the last thing is that if you look at the the earnings reports, we have been seeing good earnings for corporate companies listed on the exchange. So all of those factors is what is shaping the market and making the upsee good repricing.
So quite a myriad of factors there, certainly quite interesting, like you've highlighted. Now, we all know, Taofeek, that the ultimate sign of a bubble is mostly performance-chasing behavior. So asset goes up in price because people are buying it, then more people buy more of it, and then it makes the price go up even higher. Some say that the stock market is in a bubble right now. What do you say to that?
Okay, so we need to even understand what a bubble truly looks like.
To begin with.
Right? So what we are seeing in the market, we are seeing that there is a sustained momentum that is taking the market to a new high every day. But what is driving this market is what is fundamental. So the market currently is value-driven because we have seen corporate return reports that were released for Q1, which look very attractive. So if you look at some corporate earnings, they outperform what they did in the previous quarter of the 2025. So what is driving most of this valuation we are seeing now is value-driven, fundamental-driven. So it is not majorly driven by fear of missing out. It is not majorly driven by just trying to chase social media hype or go after a moving stock.
Oh, that's really great to hear because, what's the point of that ultimately, right? When the market is this hot, what is your advice for people who are trying to buy into it at a particular time?
So my advice for people that want to jump into the market at this moment, I believe what they need to do, they need to leverage the financial system, not to get their hand on. So what I'm trying to say is, if you want to go into the markets, not knowing where to place your money, you want to do it yourself when you don't have sufficient knowledge to do that, probably you might need to leverage an asset management firm where they have, for example, an equity stock, where you can commit your money into it and watch your money grow. Because you want to grow your money, you can see the inflation is hitting very up. So if you allocate your money into equity with a reputable asset management firm like Pathway Asset Management, you are going to eventually get a decent return while you focus on what you do best, which is your personal business.
So best to have a more guided approach towards it, get an asset manager to basically navigate through that. Let's get your thoughts on some sectors of the market, beginning with the banking sector. What is your take on banking stocks and your outlook for that sector?
So looking at the banking sector, so we have seen a lot of reforms that has also happened in that space. So coming from the CBN policies of forbearance to take care of the non-performing loan, we have also seen the bank completed their recapitalization. So what that means is that they now have a new capital that they can use to grow major sector, because the bank, they are the one that serve as the intermediary between the deficit unit and the surplus unit. So they now have a capital base that they can deploy to further strengthen growth in the what's it called, the real sector of the economy. So generally, the banking sector still look very attractive. So if you look at the fundamental value, which is going to be a reference point about their book value now, is still what the market is doing is nothing near compared to what the book value of most of these banks look like. So it means if you want to play in that space and you have a long time trajectory, you are buying at a discount, and with time, the market is going to catch up with the book value and you get a decent return.
Oh, that's very welcome information there. Moving from that to oil and gas stocks, looking at the war in the Middle East currently, in what ways are these impacting oil and gas stocks in Nigeria?
So looking at the events in the Middle East and the way it is shaping the oil and gas sector, so if you look at the upstream sector precisely, they are the one in the money, in the sense that they are now able to sell the same, they are able to sell their products at a premium price, because there is scarcity of supply due to the conflicts in the Middle East. So that sector is doing very well. But when you now look at the downstream, when you now look at the downstream, they are not going to do very well relative to the upstream, because they are not the one
right now, or looking even further.
Yes, you know, when you look at the interplay before now, the downstream is a very fantastic sector. But because we now have the Dangote refinery, right, that is now trying to make provision for local consumption instead of relying on imported products. So that has kind of way of restricts their margin. That's for the downstream. But for the upstream, they are the one in charge of extraction and basically supplying the feedstocks to other participants to bring out the product. So the outlook for them generally is that they are in the money. They are just smiling to the bank, looking at the price of crude oil over $100 per barrel.
It's a good place to be, isn't it? It really is.
Well.
Now, speaking of that, you know, you touched on the Dangote refinery, which is one of the most anticipated IPOs this year. Can you speak to the excitement around this?
Yes, so the Dangote refinery, so once it comes live, once it eventually gets listed, so it's going to shape the markets in the sense that it's going to increase engagement in the market, but from both local and foreign participants. So it's going to create a dip to the market. Like, there will be serious engagement in the market. Everybody wants to participate in that IPO. So if you look at it beyond the IPO, it's a very strong project in the sense that the project alone is going to lift a lot of burden on the FS. Before now, what we've been seeing is that most people will rely majorly on imported fuel. So that means we need dollar to participate in this kind of, in this kind of agenda. But now that we have a local refiner, it means the burden has been taken off the exchange rate. So it means once we are able to get our product locally, if the refinery also has spare capacity to import, then we generate FS that is going to strengthen the naira further, and in fact increase the reserve, which means the corporate business will be able to do their business with cheap exchange rates, which is going to strengthen their margin and increase valuation for the business listed on the exchange generally. Right,
so the call for self-reliance has never been more rewarding as we're beginning to reap the dividends of that. Let's move into another sector, let's say telecommunications. You know, many would argue that this is the most important sector for Nigeria for known reasons, perhaps. How attractive are telecommunication stocks currently?
Yeah, so looking at the telecommunications, so it's a very important sector of the economy because they power other sector of the economy, so to speak. And if you look at the attractiveness of that sector, is that they have the potential of generating repeat income, that's recurring income. So we've been seeing increase in requests for data. So there's a lot of requests for data. There's a lot of data, adoption of fintech, so everybody's going digital. So the market is only going upward. So because of the repetition in their income stream, so that sector continues to look attractive. So that's number one. The second thing is that in as much as the Naira continues to strengthen against dollar, it means whatever instrument that they need to import to continue to operate in that space, they'll be able to get it cheaper relative to when there is volatility in the exchange rates. So that this sector is a good one, and the outlook for them is also fantastic.
All right, we're getting a really positive outlook on this. Is always welcome. We, of course, can't wrap up without talking about industrial goods sector. Cement stocks, what do we have there, attractiveness-wise?
Okay, now looking at the cement space, right? So the cement look very attractive at this time because we have infrastructure gap in Nigeria, for example. So the government spending into this sector is very aggressive. So we are trying to catch up with the deficiency that we have experienced in the past. So there is a demand for that product line. And again, if you look at the way cement is priced, so they are able to push the costs. The producers are able to pass on the cost to the consumer, so they determine the price. So their margin is not any way constrained by what we are seeing in the Middle East, because what the cement industry generally needs to produce their output is majorly energy driven. So because they have the ability to determine the price, they are able to strengthen the margin and get a better return on investment. So the outlook for that sector is also very solid and positive.
Right, so it sounds like we're certainly spoiled for choice when it comes to going right into the stock market. We have so many options to go into healthily as well. Taofeek, I want to thank you so much for joining us today. We've unfortunately run out of time, but hopefully we keep this trajectory going. Is it the next time I see you? Hopefully we're talking even more positively.
Yeah,
Many thanks for joining the show.
Thanks.
You're most welcome.